Back, everyone. Next, we have Citizens Inc. It trades on the New York Stock Exchange under the symbol CIA and is a diversified financial services company providing life, living benefits, and final expense insurance and other financial products to individuals and small businesses in the U.S., Latin America, and Asia. Please welcome Gerald W. Shields, Vice Chairman and CEO, and CFO Jeff Conklin. Nice to see you, gentlemen. Welcome back.
Thank you. Thank you. We look forward to this time. I think we're going to start with an overview of some slides and then take some questions at the end. Is that right?
Perfect. Yes. Call me back when you're ready for questions.
Okay, thanks. So I'm going to start with an overview of Citizens. Not sure how much you all are aware of who we are. So we are we're headquartered out of Austin, Texas, but we specialize in offering traditional life insurance and endowment products, and really in niche markets, if you will. We have policyholders in more than 70 countries. We have over 2,300 independent agents. That number is actually now up to being well over 3,000. And we have about 1.6 billion in assets. I think that number now, insurance in force, is actually 4.9 billion now. So a growing portfolio there with about 167 million, if you will, in premiums. And you can see there we show where those premiums come from. Again, we're in 70 countries, but this kind of shows the predominant countries. We've been in business for over 50 years. So we're an older company, established company here. If you look at our business, we really fall into two segments. One is the life insurance segment, and that's 72% of our revenue. And that's mostly international business. We sell U.S. dollar denominated policies and contracts in these countries, mainly to upper middle class and middle class family, and those with significant net worth and earnings in their respective countries. The domestic market, we also have products in there, but it's more like what we call final expense contracts. And that, it's interesting, the international is our largest segment, largest block. The fastest growing block is the domestic final expense block of business. We also have what's called home services. Years ago, they used to call this debit route type business. And we're in 3 states there with Arkansas, Mississippi, and Louisiana. Louisiana is by far the biggest state we're in with that. With our ordinary whole life final expense, we're in like 38 or 39 states. That changes periodically as we get approval in other states. So the next slide I want to talk about really how are we uniquely positioned in growth. And we're having phenomenal growth right now across most of our segments and most of our markets. So one thing is in our international market, what we sell is U.S. dollar denominated products. So we'd sell a whole life product or an endowment, and we would get funds in U.S. dollars. So we don't have to worry with the conversion ratio of foreign currency. And what we pay is in U.S. dollars. That is a significant advantage in our international market, because if you're in a country that has 200% inflation, you're protecting your net worth by having U.S. dollars. So we pay claims in U.S. dollars, and as they accumulate cash value, we return U.S. dollars. We also, another unique position for us is we have expertise in the Latino market. If you walk through the building here, and if you're in Austin, give us a call and come through our building. We're in the Domain area of Austin, but we really have expertise in the Latino Hispanic market. By that, we don't just have people who speak Spanish. And a lot of insurance companies, and I know when I was with a couple others, they would go to the local college, they'd get 3 Spanish majors, and they'd put them in the call center and say, now we have Hispanic support. We have people who are from these countries, from Colombia, from Argentina, from Peru, from Costa Rica, and they identify with the culture of our policyholders, applicants in that country. That is a huge competitive advantage for us. And people come to us because of this expertise. We also have some niche markets that are really growing. We have a white label product in our U.S. upon our expense product. And we have a really good offering to professional athletes, mainly international, mainly soccer, but also baseball. And if y'all follow sports, you know an awful lot of the professional baseball players come from Latin America or the Caribbean, and we support that. We have broker business and affinity business that is really one of our fastest growing segments here. I would say also the last thing is I would say product innovation. So more than 20 product introduction in 2021 or 22. And then in 23, we put out another 4 or 5 products. We've already put out a new product this year and have like 2 more coming. So if we talk about what are our milestones for this year, so I think one is target is to increase first year life and accident and health premium revenue by at least 6%. Any insurance company, it's imperative that they're growing first year revenue, first year sales. If we grow first year sales, that doesn't necessarily give you a whole lot more premium revenue this year. But what it does is it builds your base for next year and the following year and following year. So this is a business with a longer tail. First year, growing first year sales is imperative to 2 to 3 years down the line what our revenue is. We're also improving our retention metrics by 4%. Again, retention is critical. You don't want to have more people leaving out the back door than coming in the front door. We're expanding our global network of independent agents by at least 20%. And we're also introducing 2 to 3 new products. We've already introduced a new product this year. We actually have one that's coming out here later this summer. So if you look at how we're doing some of these, I think for increasing first year revenues, we're managing our domestic business. Our domestic business is growing at an unbelievable rate. It's in 2023, we increased the number of writing agents who write business by 85%. And already through the end of February, we'd increased by another 11%. This is our distribution network. And as we grow distribution network, that immediately, or that ends up driving revenue, sales. We're also seizing our international opportunities. So there's a couple of things international that are really cool. I'm really excited about this. I was just talking to one of our, the head of sales, and he was saying he's been in the insurance industry for about 30 years. He said he's never been someplace that he was as excited as he is here across all of our markets. But in our international, for the first time in the history of the company, we're actually engaged with a lot more brokers. It used to be that we just had independent agents. Now getting brokers who will bring 200, 300,000 agents in. We have that. We have about 5 of those in. We're also doing work with associations, what I call the affinity business. And that is the first time ever in the history of the company. We are really working to manage all these relationships and manage each of our 3 markets, if I will, being the international, the domestic life, and our security plan. Are you doing this with me?
You were going to do it.
Oh, I'm sorry. I was hoping I was handing it off to Jeff, but I'm going to do it. So the key to our investment in what we're doing is really, we believe we're uniquely positioned in the market. We talked with a big affinity group this week, and they have looked for 3 or 4 different times to try to find a product that had the global reach that we have. And they failed each time and said, you all are the only ones who we know who do US dollar denominated in Spanish, Portuguese, Mandarin, and English. We really have a lot of opportunities for growth. Again, I went through some with the broker, the affinity, and our domestic business. We are very much known as a company, and I'll tell you, one of our value propositions is our ability to execute. So again, to put out 24 products in 3 years, that's really what it is, our ability to execute, not just like, Larry Bosti wrote a book on execution. It's probably the foremost book out there on execution. And Larry Bosti, he was at GE and then at Honeywell. He says far more companies fail because of lack of execution than lack of strategy. And he says, I'm not saying strategy is not important, but who really cares what your strategy is if you can't execute? And I think that's what we've brought is really this execution culture. Jeff?
Okay, so back to kind of Gerald's comment about execution and about growing our agencies by 85% last year. Those are really excellent leading indicators for success. And I would hit a couple of these on this slide. So you can see in the kind of the second bullet on the left there, our first year sales have increased 5 consecutive quarters year over year, that is, which is back to the growth of the agents in force in agencies and brokers is helping us lead to growing the first year sales, which ultimately become renewal year business. You can see in the second bullet there, our insurance in force continues the increase. I'll show you a slide in a second with a graphic that shows the last 2 years, some explosive type growth. We continue to deliver new products. In the middle column, one of our delineations is really doing U.S. dollar dominated products internationally. And then also, as we expand into our geographic expansion in the U.S., we are now up to 40 states that we've yet to fully penetrate because of we had 30 states last year, now we're up to 40. So we continue to grow that geographically. Finally, on kind of discipline, expense, and capital management, we've had 20 straight years of positive net cash flow from operations. We actually have a share repurchase program that we can execute upon. We do not have debt, and we have access currently to a $20 million line of credit. And more recently, last year, we've got our first AM Best rating of B++, which we're very positive about.
So I want to echo some on Jeff talking about getting in more states domestically. It's kind of chicken or the egg. You have to get in more states to attract more distribution, but the distribution won't come unless you're in more states. And to get in more states and get distribution, they go hand in glove. So one of them happens, and then we move more, and we get that. So they kind of grow together.
In the next couple of slides, I'm going to show you kind of the growth in our book value. But I think something to point out there in the blue at the bottom is, our price to book value is kind of, we feel like we're undervalued because we're at kind of 0.46. And generally speaking, insurers can usually range from 1 to 1.5 times the book value. Peers we compare against, are 0.93. So back to kind of executing on success. Because of our new products, new agencies, distribution growth, you can see that our amount of new insurance issued in the given years exploded from 21 to 22, and we continue to grow another 10% from 22 to 23. Our shareholder returns, here you can see that we continue to add value to our shareholders by increasing our adjusted book value over 10% year over year from $5.31 to $5.85. And to the right, you can see that we continue to grow our shareholders' equity. We're going to skip a few slides to get to Q&A. The thing I want to point out on this slide is back to just financial discipline. We use very large global reinsurers to reinsure our business. Typically, anything over $100,000 of face amount is reinsured to one of these big reinsurers. And then we have a very conservative portfolio, which I'll show you on the next slide. So we have a high quality, well-diversified fixed maturity portfolio. 99% of our fixed income assets are investment grade securities. It's diversified across our asset class, sector, issuer, and an overall average credit rating of our portfolio of over $1.4 billion in fixed maturity securities. We have a little bit of diversification into long-term invested assets of 6%. That does produce a nice yield enhancing income for us that we've grown over the last couple of years. Key to insurance is regulatory capital. We have two businesses. We have a business in the U.S. and then we have a business in Puerto Rico. Actually, if you read some of our disclosures, we just moved our business out of Bermuda to Puerto Rico to take advantage of the Latino market, the ability to use Spanish speakers in Puerto Rico to help grow our business internationally and potentially help us in the U.S. as well. To the left is our main company in the U.S., and you can see the RBC has always been above most of 500% across the board, well above our internal target. On the right side is the Puerto Rico capital requirement, and although it's odd, you actually have to keep it below 7-to-1 ratio. So anything below 7 is a good ratio, and we hold within the regulatory capital of the Puerto Rico regulator. I've already talked about the access to the credit line. The parent company, our holding company that holds all of our insurance assets and companies, has a little over $25 million available to deploy in need of capital needs to the insurance organization. Kind of a year-end financial highlights. Kind of the year, full year, our total revenues were up from $232 million to almost $241 million, driven by new business and net investment income. And our earnings per share were down a couple cents year over year, primarily driven by a bit of operating expenses and taxes. Let's see what else. Bet value per share grew over 36%. Once again, we continue to add value in our equity position. That concludes our kind of our prepared statement. So I guess we can go to Q&A.
I know we went through this fast, so just ask us what questions you want.
All right, we do have some questions for you. Lenny Burke asks, your $4.9 billion, is that assets under management or over how many agents is this?
That is the $4.9 billion is insurance in force. So that is the face amount of every policyholder that has business with us. And it's $4.9 billion. It will be in the $5 billion this year, which is a great milestone for us.
And John Dillon asks, what type of life do you write? Is it term, whole, variable, and what percentage of each?
So we write whole life. We don't do variable. We don't do term. In our marketplace, that's not what we sell. And so it's all whole life. And we have endowments, which are really a whole life that has higher income capabilities on it.
And Tucker Lynn asks how you pay your sales reps. Is it a draw, salary, commission?
It's all commission, and it too is in U.S. dollars, which allows us to attract a higher caliber agent because they like getting paid in U.S. dollars, especially in the countries they live. So that's what we do. So they get, and on certain business they get advances, and certain other business they don't get advances.
And if Tom Burgess asks, if you pay and transact in U.S. dollars in foreign countries, what do you pay in a percentage in currency conversion fees?
None, because we never do anything in the foreign currency. So by us keeping at dollars, we don't have the currency conversion fees or the volatility. So I was at Aflac a long time. And at Aflac, every quarter we'd have to really talk about our gains or losses on currency conversions. And here we don't have that.
Nor do we have assets outside the U.S. All of our assets and our companies are within the U.S. or Puerto Rico, I guess, territory.
Yeah.
And Vicki Walker, yes, go on.
So it really removes a lot of the risk.
Makes sense. Vicki Walther asks, I think I'm understanding this correctly. She says many companies are advertising that they invest in life insurance policies. Do you do that? Do you buy them from holders?
No. It sounds like I can picture a TV commercial that I forget the name of it, but there's companies. Well, another way of saying that, those companies would potentially buy insurance from our policyholders, but not from us to take that. And I forget the terminology,
yes.
But no, we do not do that.
Okay. Madeline asks, how do you increase first-year premium revenue? Is it incentivizing the reps? And how do you make the product that much more attractive to achieve this goal?
Okay, so I think there's two or three things. So it's the benefits of our policies. So we make it for a much more robust product, okay, that So if you have this product and here's the benefits on it, and then here's this new product we come out. So by making richer benefits, and richer benefits does not necessarily mean more expensive. What it means is that it's something that is appealing to people. Can y'all? So that's the way we do it, and good incentive plans for commission rates.
And Karen Schaefer asks, how are you attracting new brokers? Do you have a team of recruiters, and what does their incentive package look like?
Yeah, so I think two of the things is, so the way our sales force is set up is obviously it's somewhat hierarchical in commissions. So if Jeff were in our sales force, when he recruits people underneath him, he gets overrides on that business. So the whole pay structure incentivizes them to grow their distribution, to grow that distribution. So that's what it is. But we help them a lot. We help them with how to recruit. We do recruiting training. We have a recruiting contests, all that to help incent the recruiters, the agencies, to go get more agents. We have contests like next week. We're in on the convention, and so part of the qualifying for a convention is not just your sales, but how's your retention, and how are you recruiting.
And Grace LeBlanc asks, where are you planning to expand domestically and internationally next?
So again, we're in about 40 states. We'll end up expanding to a few more states. We also, it's interesting, our international business is in Puerto Rico, but our domestic business is not. And so we'll expand into Puerto Rico to be able to sell there. Within Puerto Rico regulations, they actually have two different regulators on that. And so we'll expand there. And because of the Hispanic market, we believe that's going to be a very, very good market for us. Internationally, we don't need to expand in any additional countries because our footprint, we still have so much growth within those countries. So we can more than double our international business by just growing within those countries. And we keep talking about Spanish. We also do Mandarin in Taiwan, and we have an initiative going on now that we think will help us really grow the Mandarin product in other Asian countries. So we don't have to go into another country to really, really grow that business. I don't know if y'all been to Peru, but like Lima, Peru, that's like being in New York City. So think about having that market that you have less than 1% penetration in Lima. That's the type of thing we have, which is exciting to me.
Absolutely. Mike asks, do you have an investment advisory business? If you have the insurance, why not go after the client's other assets on maybe a 1% managed business?
We don't, and there's lots of different regulations, but we are partnering with companies that do have investment management. So we partner with them, and they go in and do investment management, mutual funds or whatever, and as part of that, they sell our life insurance to their people. Right. So it's more of a partnership from a regulation standpoint. It works really well.
And Valentin asks, any income products based on interest rates, and how are you handling them now, and what's the plan when they begin to fall?
So I think when you're referring to income products, that's more of a annuity business model. We do not sell annuities. We're pretty much strictly mortality-based products, which interest rates don't really impact much at all.
And Ken wants you to clarify, you are the underwriter or the products? These are your products, you are not reselling. He wants you to clarify.
Yeah, it's all our products. We design the products, we build the products, we license the product, we go through the regulators to get approval of those products, and we have independent agents who sell it, of which we underwrite and issue.
And Craig has a question I'm going to try to word well, talking about the expansion of private credit into your space. People are using PPLI and PPVA as a way to expand their private credit businesses. Have you been approached by any of these platforms to do a distribution deal or anything similar, like the Kuvari trade to Blue Owl this week?
So people have approached us. but we haven't really found a partner that we think provides the right level of product and support for our customers and minimizes risk. So we're believers that we're not going to try to be all things to all people. We're going to do the things we do exceedingly well. And we'll do partners with people where it makes sense for them and for us. And we have people call us all the time about partnerships. Again, we had a large financial services company from South America in this week. They have several 100,000 financial customers, and they are really, really, really interested in life insurance. That makes good. It helps their customers. It helps them. It helps us with distribution. Those are the things we're trying to seize, those opportunities.
Wonderful. Well, gentlemen, do you have any closing remarks for our viewers today?
I'll just say one thing is, so I worked for Aflac for a number of years. I was hired when the duck came out to handle that growth. And one of the gentlemen who runs our domestic business, I knew him at Aflac. He and I were peers. And he and I both reminisce all the time about the feel that we have here is like that same feeling of the growth and the excitement that happened when the Aflac duck came on the scenes. So that makes a really great place to work with a really great future.
We all know the duck.
That's right.
Well, thank you, gentlemen. We appreciate you coming back, and we look forward to following you along this journey. Great. Congratulations on all the success. All right, we'll see you soon.
Bye.
Thanks.
All right, everyone, we'll be right back with Ladar Tech Holdings.